So, George, welcome back. We're going to go into it again. I was looking at the macro, and Germany is in serious trouble. I mean, their electricity power is too high. Japan is in serious trouble. I think their debt to GDP is almost 200 or something. Then you have America. So you have the three powerhouses: Germany, Japan, and the US. And we're all kind of struggling. I was just in Japan a week, 2 weeks ago, and I was going, how do these people survive?
How does the average person survive?
Yeah. So we're talking about bifurcation, when they print money. So they just keep printing yen. For some reason, it hasn't collapsed. The problem with Germany is power costs too much because the Green New Deal went in there. They took out all their nuclear and stuff like this, and they can't afford to run their cars and all this stuff. And they have America. So the three engines are in trouble: Japan, Germany, America. Then you have China coming on. And we have a war in the Ukraine with Russia. Can't get more macro than that, George.
A lot of moving parts there. And I think what's important for people to understand, going back to kind of what you touched on briefly before the break, was the yield curve. We were talking about two separate things there: the bifurcation of the real economy with the haves and the have-nots, and that potentially leading to social unrest. But then we also have the yield curve that's telling us that that underlying economy isn't doing well. It's definitely not running on all 8 cylinders, which anecdotally, I think most people would see in their own life who are watching this video or listening to this podcast. So then we zoom out. We say, okay, that's what's happening in the United States. The rich are getting richer and the poor and the middle class are really struggling to put food on the table, roof over their head, because their purchasing power overall has gone down since 2019 because of these economic policies that the central planners put in place to quote unquote help us. Zoom out, we look at what's happening in Europe. We see the Swiss central bank has already taken interest rates down to 25 basis points, so almost at zero. And then you pointed out Germany, they've been doing a little bit better more recently, but all of the Eurozone has been struggling. The UK has been struggling. China, they would never admit to being in a recession, but every single indicator that I look at is pointing in that direction. I mean, you look at their real estate market, that alone, I don't think most Americans really pay much attention to this, but the largest asset class in the entire world as of about 2 years ago was Chinese real estate. It was about $60 trillion asset class. So that's bigger than the US stock market. What you've had is that market has come down a 35%, $20 trillion of net worth just evaporated in China over the last 2 years. So think about how that impacts their demand, think about how that impacts their economy, and then realize that their economy is the second largest in the world. Whether we like it or not, we live in an interconnected global economy. It's not necessarily true that if China goes through a recession, then the United States has to go through a recession, but it definitely creates a headwind. So then we have all of the other economic policies. Now, you can like tariffs or not like them, but the bottom line is it does create a lot of uncertainty, especially the way Trump implements them in, let's say, a hazard way.
Honestly, a lot of money right now because I can't build a house because my builder won't quote. I don't know the price of lumber.
Exactly. So why is that? Let's just unpack that for the viewer, Robert, because that builder most likely is going to get his lumber from Canada. If lumber costs 25% more tomorrow than it costs today, and let's just say lumber is 50% of the cost to build your new house, there's no way. He's like, I have no idea what price to charge you. And then to take it to another level, if the price could be 25% higher tomorrow, a week later, it could be back to where it is today. Or again, I'm not saying that Trump isn't good at negotiating or these aren't good negotiating tactics. I think they are, but there's trade-offs, right? There's always costs and benefits. And one of the costs is it does lead to this environment where a lot of businesses are just kind of frozen. They don't know what to do. When they do nothing, that reduces economic output and economic activity, which could be a headwind to the overall economy. And we're talking about the U.S. domestic economy. And then you add that to what's going on in the Eurozone, in China, now places like India, in places like Canada, who their central bank has brought down interest rates by 2.5% because their economy is struggling. Then you look at all the geopolitical stuff that you're referencing earlier, and you understand why the yield curve is telling you that a lot of the market participants are in a position of risk off right now. They're not wanting to take risk. They're wanting to de-risk, which goes back to how the average American can protect themselves. And one of the ways they can is obviously through gold. And I think that because we have so much uncertainty domestically and internationally, economically and geopolitically, it's the main reason why you see gold at over $3,000 today.
Would you explain yield curve? Because that's one of your strong points, is that what you watch. And every time I study yield curve, I get more confused.
Let's just focus on two interest rates, Robert. Let's just focus on the Fed funds rate. So whenever you hear that Jerome Powell is dropping interest rates or is pausing or cutting or hiking, they're talking about the overnight rate that is set by the Federal Reserve. Then let's also take, and that would be the 10-year Treasury yield. So those are two different interest rates. In a healthy economy, the 10-year interest rate should be higher than the overnight rate because obviously you have more risk. If you lend money to someone for 10 years, there's more risk that they won't pay you back, and you have more inflation risk than you would if you lent them money for one day. When you have an inverted yield curve, this is when the 10-year Treasury yield is actually lower than the overnight rate. It's not higher like it should be, it's lower. It's not that complex because what this tells you is that these global pension funds and hedge funds and banks inside and outside the United States in what we call the global monetary system, they're seeing a lot of risk. They've got two choices on what to do with their balance sheet or with their money. They can lend that out into the real economy at, let's say, 6%, but you're taking a substantial amount of risk right now. Or what they can do is they can buy a 10-year Treasury at, let's just say, 4.2%. Those are their two options. So when you look at the risk reward and you look at the price or the yield on the Treasury, you see that most of these big pension funds and banks globally, they're choosing that 10-year Treasury yield or that 10-year to buy that 10-year Treasury, as opposed to lend that money out into the real economy. Don't listen to what they say, just watch what they do, because actions speak louder than words. And what they're doing with their actions shows you that they are not confident. There's a lack of confidence out there for what's happening, not just in the United States.
What George is saying is money's only created when it's loaned out.
Yeah.
So when they don't want to lend out their money, the economy collapses. You may go smaller and smaller and smaller. So a guy like me, I'm not going to build because I don't know the cost. My builder's got his guys, on hold, and the whole thing goes to what they call stagflation or whatever they call this thing. But I watched this going, I said, this cannot end well.
The holding is stagnation, where a very low growth because you don't have any of that economic activity because of the uncertainty that we're talking about. And that's being reflected in the Treasury yields because the 10-year Treasury is under Fed funds. That tells you how much uncertainty and how much risk is being perceived in the economy.
So what you're saying is what I've been saying for years, gold and silver. What's your stance on Bitcoin or crypto?
I don't really like crypto so much, but I do like Bitcoin. But the reason I like Bitcoin isn't necessarily because the price is going to 1 million or it's an inflation hedge or anything like this. The reason I really love Bitcoin is because it gives you purchasing power outside of the system. A very similar reason to why I like gold, because with gold, there's no counterparty risk. As far as I can tell, and I do a lot of research, Bitcoin is the only decentralized. That's crucial. It's decentralized. So that's why it allows you to transact outside of the system. And in a world of big governments and out of control central banks, central planners, authoritarians, geopolitical risk, you want to have purchasing power outside of the system. Or one of the few things that I don't like about gold, it's very difficult to transport. Where Bitcoin, you can take basically an unlimited amount just in your back pocket or just in your head, and you can take that down to Argentina or wherever you want to go. And you can't do that with gold. You can't do that with silver. So I think as a plan B type of approach in this kind of crazy world that we're talking about, where we know for sure it's going to be volatile, that you've got to have gold, you've got to have silver, you got to have Bitcoin. And believe it or not, I think you've got to have some cash. And I'm not talking about cash in the bank. I'm talking about green pieces of paper in your safe at home. Although it is being devalued, that's true. But those green pieces of paper, they have a lot of liquidity. Wherever you go in the world, you can use those things.
Weren't you just on some road trip where you were experimenting with what you could exchange? I mean, where'd you go from where to where?
Argentina. Yeah, I drove across Argentina trying to use nothing but gold, silver, and Bitcoin. We did have, I think, maybe $500 or something like that to start. And so what I was having to do is I was going from town to town trying to sell the Bitcoin, sell the gold, sell the silver to either get dollars or to get their local currency to put gas in my car or to eat or to get that night's hotel. It was quite a challenge, that's for sure. It was quite a journey, but it really opens up your eyes as to what is so important and such a key component of being truly free. Most people, they think they're free because they live in the United States, but they don't realize that if the wrong central planner, puts a target on their back, if they get frozen out of the banking system, you're done. I would really encourage people to think about that. What would happen if you could not have a bank account? What would you do? How would you get paid? How would you run a business? How would you work for an employer? How would you pay your bills? How would you even leave the country? How would you transfer money? How would you transfer purchasing power? The answer is if you get debanked, you got big, 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 big problems. I would encourage people to don't lose sleep over that, but just be cognizant of the possibility and just set up your life to where you've got some sort of hedge against that.
So you're saying what I'm saying too is you want to be operating outside the banking system also.
You want to have the ability to, for sure. I don't see any downside to it whatsoever. A lot of people have to understand that what Trump is doing right now with all these executive orders, and you can like them or dislike them, everyone's entitled to their opinion, but he is taking a kind of strongman approach. You could argue that he has to do this and it's more efficient, and I think there's a good argument for that. You also have to understand is he's setting a precedence. We were only going to have Trump for another 3.5 years. And then we get someone else, and it might be Kamala Harris, I see, or it might be Gavin Newsom, or it might be someone that you don't like that will use those tactics and those policies against you. That's why we always need to be cognizant, the slippery slope there when it comes to the authoritarians that inside the United States and definitely outside the United States, when you look at the World Economic Forum, that are quite literally trying to control your life.
So George, thank you. Thanks for holding the station there and being a sounding board for sanity in this insane world of money. Thanks very much. And then we'll come right back. And any final words, how people get in touch with Rebel Capitalists or George Gammon or whatever it is?
They can just Google my name, George Gammon. They can put it into YouTube and all my channels. Another thing that is encouraging, Robert, I don't know that we've had the chance to talk about this, but about 2 months ago, I started creating content in multiple languages. If I do a whiteboard video, let's say, on the George Gammon channel, I now have George Gammon Russian. I have George Gammon Hindi, George Gammon Mandarin, George Gammon French, in all these languages. Same thing with the Rebel Capitalist channel, in which we're really promoting that message of freedom and liberty. I'm starting to see those channels in all these other languages really start to pick up as far as the subscribers, the views. The reason I think that's encouraging is because it shows you that that message that Ron Paul really made famous in our era is resonating, not just in the United States, but resonating around the world.
Yeah, how did you get the shift to different languages?
Just through AI, believe it or not. That what my editors do is they just take an original video and they just plug it into AI, and what you get back is, and it's my voice. It's my voice speaking perfect Russian, as an example, or perfect Mandarin. And they even move the lips, and then they just upload that new video onto the foreign language channel, and you're off.
Well, thank you, my friend. And keep up the good work. You're holding the station out there and make a big dent in the world. So thank you, George.
Thank you.
Once again, I want to thank George Gammon, Rebel Capitalist. Every time I listen to George, I learn something new, expands my world. So I thank all of you who listen to the Rich Dad Radio Show. There's so much change going on. Unfortunately, our schools are not keeping up with that change. So that's why I suggest you listen to people like George and different YouTube channels where people are actually doing it day to day in the real world. So hey, thanks for listening to the Rich Dad Radio Show. Go out there and get outside the banking system. Thank you.